As you probably know, the Feds dropped rates this week. So how does that affect us? Hi, I'm your mortgage guy, Dave Steinberg. This is Rate Watch. Every week I bring you the news that you need to know to make better, more informed mortgage decisions. Fed dropped rate, and contrary to what's happened over recent months, the rate dropped and the mortgage market stayed fairly stable. In fact, I'd say that the general market rate is about 10 basis points better than it was a week ago. That's not bad. Let's talk about rates though, because, I've been in this business for almost 4 decades. 4 decades ago, there was a rate sheet. The bank had 1 or 2 rates on a piece of paper, and that's what a rate sheet was. Today, it's far more complicated. Your rate is going to depend on you. It's going to depend on your qualifications. It's going to depend on the program that you take. It's going to depend on a variety of things, including the type of house you buy. So let's start at the top and let's understand how rates work. Number one, it depends on your credit score. Your credit score is one of the big determinants of the rate you get. Someone with a 780 credit score is going to get a far better treatment than somebody with a 580 credit score. 580 will still be able to buy a home, but you're going to be restricted in a variety of ways. Number two, what program are you taking? Generally speaking, we start with what's called a conforming loan. Conforming loans are loans issued by Fannie Mae or Freddie Mac, and they're the gold standard, generally speaking, for consumers. Consumers with less good credit often end up with FHA loans. FHA loans sometimes have great rates, but they also have some upfront fees and some other features that make them less attractive sometimes. Then there's veterans loans. Now, veterans loans, if you're eligible for a VA loan, boy, that's a home run, because VA loans have great rates, allow you to put 0 down, lots and lots of great features. And then there are other programs. So let's say if you're buying a house and you need a loan that's $2 million, you're going to get a jumbo loan. Your rate is going to depend on the loan program that you're going to take. I got to tell you that, the question we get often is, what's the rate? And even if I know that we're putting someone into a conforming loan, it's still a loaded question. The best way of asking that question is, what rate can I get given my circumstances? If you're buying a 2-family home, that's going to have a higher rate than a 1-family home. Potentially, if you're buying a condo and you're putting down less than 25%, oops, there's an add-on for that. If it's an investment property or a second home, there's add-ons for that. So depending on what you do, the rate's going to vary. Finally, there's a lot of people who lead with rates that you just won't even qualify for. I don't know why they do it, but they suck you into the door. So here goes. I've been doing this for a long time. I love talking to people. If you're looking to buy a home and you're in my market, New York, New Jersey, Connecticut, or Florida, give me a call. Let's have a conversation. No obligation. I'd be happy to determine what your best program is, give you my best shot at giving you a great rate. Top of everything else, we were there to serve.